Welcome to Optimum Forex Trading. Robina from Zim's Trading Journal. I trade ICT concepts, having learned how to trade from the free mentorship provided on his YouTube channel. My main pair is cable, which refers to Great British Pound USD, and I focus on trading during the London morning session. Specifically, I pay close attention to fair value gaps and am learning order blocks. If you're interested in using the trading approach I use, I recommend visiting the Inner Circle Traders YouTube channel, where he teaches algorithmic price action trading for free. Now, I want to emphasize the importance of the following disclaimer. Please view everything you see here as entertainment and not any form of trading, financial, or investment advice. Additionally, it is important for you to know that I will never engage in direct messaging you, and if somebody using my information approaches you, please block them and report that individual immediately, as they are trying to scam you. All communities I manage will be linked to my YouTube channel, including my email address, so use it if you need to ask any questions. I'm here for you, so you're welcome. Right, so if you enjoy my channel and feel inclined to support my trading journey, please hit the like button, subscribe, and ring the notification bell so you can be notified every time I post a new video. I sincerely appreciate your visit today and hope you will stay longer. Let me know if there's something that you want me to discuss, and also let's discuss the strategies that you trade and how your trading journey is going. Great, so now let's shift on to the charts. And today I want to talk a little bit more about Great British Pound. I will not go into reviewing the other markets, the other asset classes for next week. I want to hone in on cable because there's something that I realized or that I thought of yesterday that I mentioned that I would speak in detail on today. So that's what I want to focus on today. I want to focus on order blocks, but mainly on cable. I will also touch on CBs and how they relate to the order blocks and the swing levels as well. So today is going to be an interesting video, I hope, for you. I will try as best I can to explain what's in my mind. I hope I will do a good job at it. So let's jump straight into it. Okay, so like I said, today we are going to be touching mainly on cable. I won't be reviewing the other asset classes. I really want to zone in on cable. Also, I put down some notes. I wrote down some notes. So once in a while, you're going to see me referring back to my notes because there are things that I really want to remember. Okay, so we are going to start off with the monthly. And I'm just realizing now that I could have used my replay button yesterday when I was trying to black out the section of the charts, but I forgot that I could, so I'll remember this next time. Okay, so if you watched my video yesterday when I was talking about my realization of order blocks, I then went up again, top-down analysis from the monthly up to the 4-hour, trying to look for these order block areas and trying to look for price. When Michael teaches, he teaches how order blocks are a change in the state of delivery. Meaning, for instance, when we are going up, this is a bullish leg, right? Any candles within this bullish leg that are bearish are potential order blocks because they are changes in the state of delivery. Something that I then realized was if we have a BC, like a gap above the order block run, price will likely come and reject off the initial order block. Then he's got what he calls rejection blocks. For instance, the end of this run, let me put my arrow back up. The end of this bullish run, right? The last bearish candle is considered a rejection block. Let me highlight it across and put it there. So we will write it out as rejection block, monthly rejection block. Okay, the last bearish candle on the bullish run just before the swing high is called a rejection block, and price, as it starts making its way to deliver sell side, will come back to reprice. A rejection block. It's interesting to watch when you have gone through it and are starting to pick up the areas that Michael will be teaching, and you're starting to see them on the chart. And it's fascinating how it's coded, and once you understand the code, it then starts coming together and making sense. So this is why you find that price went back up to the rejection block and then started making its way down, confirming the bearish bias, right? As we started on our bearish leg, we created changes in the state of delivery, which are potential order blocks. But if there is no CB below a bearish run, it probably isn't a order block, right? It could be a fake out. If there is a CB, like there or like there, it's a potential order block, but you look left to the run up to buy side first, and when sell side is being delivered, you look left to that order block that had the what? The BC on top. And this is what price does. Look at that. How is that even possible? As long as it creates a CB away from the order block, which is a change in the state of delivery, like it did here when it was delivering price to buy side, right? Remember, we've got green candles, red candle, green candles, red candle. As the green candles painted up right there, it created red candles, right? So when it's going down, delivering price to sell side, it is going back to refer back to these red candles, right? So as it passes the red candle, it creates CBs. And this area is where price, when it starts coming back up to deliver back up to buy side, it uses these levels to reject off. Right, so I'm going to mark these and then maybe try to explain in detail as we go down to the lower time frames, right? So let's just clean our chart now and then let's start again. I am looking left, as in far left. This is my first reference point when I was looking at this yesterday. I'm looking back, look down here, as far back as March 2020. So from March 2020 up until November, where price is right now, November 2023, this is the range that I am looking at. So as price was delivering to buy side, it had bearish candles, and these bearish candles are a change in the state of delivery because it's going up, came back down, went up, came back down. So as it came back down, it was changing the state of delivery to buy side. So I have to highlight those areas. Okay, so I would highlight this one, for example. I would also highlight that one, for example, and then I would highlight this one as the last one, for example. We concentrate mainly on the bodies of the candles rather than the wicks because of broker prices. Again, like I always say, if you trade or are learning from ICT, he will explain all this in detail, so you can go over his videos. Okay, so when this price leg from January 2021, for instance, as price was being delivered back down to sell side, the red candles, right, that painted as price went up mean something. The first one, the top one, because price didn't continue up, it came and created relative equal highs here. So seeing as it didn't continue up and started making its way down, this one would have then been considered a rejection block, right? And then price came back up, rejected off this rejection block, and then continued lower. As it continued lower, it formed SIBIs. SIBI number 1 right here, and then SIBI number 2 right there, and then it continued lower to come to take sell side, then started delivering price back up where? To buy side. But along the way of buy side, it also created red areas. Here we go. We've got this red area. We've also got this red area on the monthly. This is now the current leg, almost similar to this one. We are now starting on the new leg. So as price was going up, where was it going to? The initial order block. And then this became a rejection order block. This is why I said price might not be coming back up all the way to the monthly, right? No, this is not the candle, it's this one. Because this one has already rejected off the higher time frame order block, and as price is now delivering back down to sell side, look what's here. This order block here, this order block here, same as this, same as that, right? So we can class this as a rejection block, can't we? Because it's the last bearish candle before the swing. And look what price did. And on the side of the rejection block, we have got a SIBI. So it's possible that price, that monthly, let me remove these ones, that monthly SIBI that I had highlighted and kept on insisting that price might be coming up to reprice it first before going lower, it might not be coming up all the way here because of this rejection block that looks like this one, right? So this rejection block as well is also in line with this order block. You see this, right? So this one, I will, just to keep my chart as clean as possible, I think I will remove this leg's price action and just keep this current one that we are painting off right now. And then below price action, we have got this BUSD. We also have this potential order block, which is the change in the state of delivery. As price was delivering up to buy side, it formed some red candles. These two, not this one, because this is now the leg coming down. So these two, so seeing as it formed these two, this one would be the rejection block because price came and traded past it. So we are now looking at this one as the next possible order block that price has to trade through. So if I draw this order block out on the monthly, and I draw this properly because I need to keep these levels on my chart, and I will keep this one for now, but this one I'm going to put this as an order block, all right, and I'll put this as a monthly. Okay, so what price will probably do on its way down, right, came back up to the rejection block, is making its way down to sell side or to reprice this BUSD, right? As it trades lower, if it creates a gap like this, if it creates this a SIBI as well, what's that SIBI going to be used as? The price point is going to be used as an area of rejection for the rejection block. Same as here, this is happening again right now. So if price trades lower, creates a SIBI, we expect price to do this, come back to consequent encroachment of this order block, and then tank. So these would be the swing high, the swing low, higher high, lower low, whatever they say, but I think you get the idea. These are the points, turning points of price, turning points of market, right? So let me just go down to the lower time frame. I'll put this as a rejection block as well, rejection block, so that we can keep it at the back of our minds in case price wants to come back here. what happened there? Sorry, let me just correct this. Month rejection block. Okay, there it is. All right, so in case price wants to then maybe come back here, but then it probably will use this rejection block as a catalyst to go lower. Again, we look at the bodies of the candles, and this is where price traded up to, right there. Can you see body of the rejection block? This this would be what, closing price, right? It's up here. Closing price is 1.24413, and then this high price is 1.24285. Very, very close to the closing price of this candle. Just a few pips shy. As you can see, it's very, very slight gap, but good enough, if I can say so myself. So my focus now is on this monthly order block going forward, but I need to drop down into the weekly and see if we have a similar pattern painting on the weekly time frame. Okay, can you see it? Right, let's do this again. We have the run up to where? To buy side. As it ran up to buy side, it created changes in the state of delivery. All red candles up until buy side. So we focus on the red candles. The last red candle before the swing, which is this one, is what? A rejection block. And then look what price did. It repeats every single time frame. It does the same thing over and over and over again. Just that the lower you go, there are more candles. But it's the exact same thing. So price has rejected off this rejection block, made its way and traded past this order block. Let's remove, and then I'll remove this so that I don't confuse myself. I want to keep the monthly ones for now. Traded past this order block, these three bearish candles, and what did it create? It created a CB. Right, we have a CB, and within, just above this CB, within the monthly rejection block, we have another CB right there, tiny one right there, order block, CB. It came and is now a rejection order block, and it's going down. Right, okay. Do you want to go down to lower time frame? Let's do that. Let's remove the weekly ones. And then let's go down to the daily, see if we have something similar. There it is. You see it? Same thing. We've got this leg. This is delivering to buy side. As it delivered to buy side, it left the red candles. Those candles are potential order blocks. So price will come back down to the potential order block, reject off it, trade past it. If it creates a CB, there's the order block. The CB, it comes back. This becomes a rejection order block. Can you see this? There's the order block right there. It goes back down. This is where we are currently in price, repricing this gap, right? Let's look to the left. First, let's look at this one. We've got our buy up to buy side, delivery to buy side. We've got all red candles. This is the latest, the swing where the candles are. We look to the right. We have got a gap here, gap in price. Let's mark this. We've got a gap in price right there. We've also got an order block. As the candles painted lower, this means price is delivering to sell side. It creates bullish candles. Those bullish candles are potential order blocks. If there is a bearish CB, a bearish candle, that's a CB, that's left a gap, is a very strong area. What does price do? It comes back up, reprices, creates a rejection order block, and is tanking. And even if we look at this latest price action right here, can you see? We have our delivery where? To sell side. As it paints lower, it creates bullish candles. Those bullish candles will be repriced. You see? I hope you can see what I see. And I hope I'm explaining it properly. Okay, so anyways, let me remove these, keep the monthly on there, and then we will drop lower to the 4 hour. Okay. Consolidation, right? 4 hour. As price is being delivered to buy side, what does it do? Potential order block, potential order block, potential order block, potential order block. This price leg here didn't leave any BCs, but this one did. Okay, so we'll use this order block. These price leg here, these candles were repriced. Let me just move this out of the way so you can see. Can you see? Price was, it is a balanced price range because they were all repriced, but this candle here up to this candle wasn't. It left a gap. So as price traded up, it left this potential order block. This was the last red candle. Price came back down. So this could have been used as a rejection block if price had made its way back up. But instead, price traded lower. Within this price leg, maybe on the 1 hour or something, there could be a red candle here. 1 hour, 15 minutes, 30 minutes. There could be a red candle here. That's probably why price came, rejected off here, went back up, and then is making its way down. Where is it going? To the order block. Rejected off the order block, now is making its way up, created a CB. As it came down, these two candles are a change in the state of delivery. So this area here is a potential order block. So price could open, come up, then make its way lower. If it comes up here, it's coming to reprice the rejection block and then make its way lower. Will it come up here? Don't know. Mr. Market does what Mr. Market wants to do. We always say that we trade probabilities. So let's go down to the 1 hour where we trade off. Let me just show you what I did. This here I highlighted as the potential order block because we've got a change in the state of delivery. When price was delivering from buy side coming to sell side, the green candles, which are white in on my screen, so the white candles, which are bullish candles for me, are potential order blocks. Okay, so I highlighted this one because across from this one we have a CB, right? So it's a potential price point where prices could potentially want to come to reprice first before going lower. So watch this, and then let me just drop down to the 1 hour so you can see. Okay, so that area where I was showing you, that's a potential order block. Can you see the price action? Here we go. When we are going up, delivering price to buy side, what did we create? We created bearish candles. That's a potential order block. Price came back to reprice it. This is my Thursday trade, you remember it? It came back to reprice it, went back up into this CB, came back down. We are in consolidation. So what is it possibly going to do during Monday's price action? On this leg right now, this price point right now, it has created this as a potential order block going forward. It has also created this BC right here on the 1 hour, like that. That's green because it's a BC, right? So it is possible, it's possible that price will do this, come to reprice the BC, go up to the order block, consequent encroachment, and then start making its way down. Right now we're in consolidation. As you can see, consolidation is almost like accumulation of orders. So it's accumulation, manipulation, distribution. I would like to touch on this one. Remember when I came in on Thursday, I said price was consolidating. So we have the consolidation right here, manipulation, right? When price was manipulated to lure buyers into thinking that market was about to go up. Manipulation, it did go up slightly, but where did it go to? An order block, a fair value gap, somewhere in here. Price action had created something which contributed to these relative equal highs. Went back up, was distributed, went back to reprice here and collect more sell orders, and then it made its way down. We are right now in a consolidative range. What do you think is going to happen on Monday? This is accumulation. We need the manipulation to happen. If it manipulates going up, it will just distribute. Or consolidation, manipulation, trapping buyers into the market. We'll give buyers a chance maybe to get out when it gets to this order block, and then it will distribute. Okay, so whilst we are here, let me remove my drawings. I want to jump back up to the monthly, and I want to show you something. Okay. This is our high so far. This leg, this is our high because we have just come off this order block here. We've also just come off this CB, right? Current high. This is our current low. Where are we in price? Premium. Let's measure the bodies instead of the wicks. Where are we in price? In premium. So from premium, where are we going? To discount. Price needs to move to discount. What's in discount? ABC. What's in the way of price moving to discount? An order block. If price trades past this order block, creates a gap, price will come back to reprice the area. Let's pretend I'm not using the replay tool, but let's pretend this price leg is similar to this price leg. Order block, potential order block turned rejection block because price started making its way down. Potential order block turned rejection block because price is starting to make its way down. This order block, mark across, CB, price came back up to consequent encroachment, price came back up to consequent encroachment. It does this all the time. The trick is to remember this when you want to trade and to know where you are in price. I think that's where the trick is, because okay, where's my 0.5 fib? I think the monthly is too much. We're in premium. Here's the 0.5. We are in premium on the monthly. We need to get to discount. And when we get to discount, if you didn't watch yesterday's video, please watch it. When we get to discount, remember I drew this out like this, right? And I put this as the daily, and then I marked my fib like that. So it's important that when we then get to discount, we remember that it's going to fake those BCs and those order blocks to get buyers into thinking that the market is going up. But this leg will have created order blocks and CBs, so price will manipulate price. It will come up and then eventually it will tank until it gets to the lowest point and then starts making its way up. When it's done delivering sell side, then it comes and starts delivering buy side. Been talking for almost 23 minutes now. I hope I've explained myself clearly. If I haven't, please let me know and I will try. Maybe I will zoom in on one time frame instead, and then we will look in detail at the candles, say on the 1 hour, and then we look at the price action of the 1 hour and of the legs within that price action. So I hope I'm clear enough. We are predominantly bearish until change in the direction from delivering to sell side to delivering to buy side. How are we going to know? We look at the lows. We are trying to sell at the highest point and buy at the lowest point. So once we see these type of candles, these type of order blocks, as price is going lower, once we see the changes in the state of delivery, then it's possible that price will be going up and then coming down, going up and then coming down. That's the long and short of it. I don't know how else to explain it, but for me, it was like a light bulb moment yesterday when I was looking at price and going, this is why they say price is fractal. What happens on the higher time frame is exactly what happens on the lower time frame. It's just that you've got more candles on the lower time frame, but where time is concerned, the market moves on time every time because of Fed link. I think I've got some, yeah. There's a YouTuber, Words of Wisdom, I think it is. He was interviewing someone on his channel. I forgot the person that he was interviewing. I hope I'll remember, and then I'll try to find the video so I can link it to my video. And the guy was talking about Fedwire. So I downloaded it. There's a document. It's free. Apparently it's free online. The information is there because they have to post it online. And this document is what confirms exactly what Michael talks about time. When institutions give their orders out to move money, the money is moved by a moving house, quote unquote. It's a distribution house that has to then distribute the money or the orders. And it has to do this at certain times of the day. That's why Michael always says, if you're looking at your kill zone, you're looking at 2 to 4 a.m. price action, because that's when the Fedwire is moving orders. Anything that happens between that is noise. And then it will come back again at between 7 and 9 a.m. Anything that happens between that is noise. So as long as you can concentrate on those time frames and understand market structure in the sense of order blocks, right? In the sense of gaps, in the sense of the code, so that you know what market is now doing, because it's now this time, it should mean this, then I'm sure it will improve your trading. I'm 100% confident that it will improve your trading. What you need is the higher time frame narrative. What you need is to know where your order blocks are, change in the state of delivery. When price is delivering to buy side, green candles, red candle between the green candles, potential order blocks. The last red candle before market starts delivering down to sell side is a rejection block. And as it's delivering down to sell side, it will leave gaps. Those gaps need to be repriced. And if that gap is aligning to an order block, that's a powerful level. Okay? Price will come back to that area, then continue lower. And if you notice at the swing lows, price will come, create a swing low. As it's creating a swing low, it will be bearish, 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 then bullish. That's an order block. Price again, when it goes down, will come back to that area and then continue up. Yeah, I hope I'm making sense. Let's see how the market is going to paint next week. Let's see how well I've understood what I've just said. and let's see how that's going to improve my trading for next week. So I'm looking for, I said Saka. I spoke Shona there. So I'm supposed to say so. So I am looking for bearish trades next week. On Tuesday, I am going to look at how Asia painted and to see if Asia left any order blocks and any CBs below those order blocks, because price could potentially want to come up and use that order block and CB zone as an area for it to reject and create a rejection order block. And then I'll look again across at the New York time price leg, the delivery to buy side, and see if price has created any order blocks, and if any of those order blocks align with either an order block or a CB that was created in Asia. I'm going to be interested in watching that price point and see what market is willing to do within my kill zone. So kill zone can go down. That's the manipulation after accumulation of orders. Then it can come up to that order block, and then it will bounce off the order block after my kill zone. I'm interested to see how this is going to pan out. So until Monday evening, I will try to do a video on Monday evening just to update you on what price has done. But until Monday evening, I will see you then. Don't forget to like, to subscribe, and to hit that notification button in case I keep getting these light bulb moments, so I can share what I have realized. So until then, enjoy your weekend. I will see you next week. Bye bye.